Hello everyone and welcome to This Week in the Markets. So it has been a relatively quiet week in the market with a few economic news out from China and US. The rest of the week seems to be pretty much focused on currency intervention as the ECB started to suggest that officials are watching the euro as a threat to price stability. And Japan came under pressure from the G7 meeting, and also the G20 richest nations will also meet this weekend in Moscow. We'll take a closer look at this news in more details after our disclaimer. So information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regards to your objectives, financial situation, and needs. So China's import and export numbers were very positive, growing at a rate of 28.8% and 25% respectively. This is a 4 times jump from the 6% import growth and almost double the 14.1% export growth in December. The strong and mostly unexpected strength in the foreign trades data is yet another piece of information supporting the recovery in China, which should also be a strong precursor to the global economy. On top of that, the inflation as measured by the CPI is still in line with expectation at 2%. Chinese policymakers have been reported to target an inflation of around 3.5% in 2013. So this is still quite a low inflation rate, and it gives policymakers more room to adopt looser monetary policies and more stimulus if required. At the very least, it doesn't seem to impose any risk of Chinese tightening monetary policy anytime soon. In US, the retail sales figure increased for the third consecutive month at a rate of 0.1%. This was in line with expectations, so it didn't really move the market much one way or the other. Nonetheless, looking at the general trend of the chart, we see that retail sales have been growing quite consistently, moving up from the bottom left-hand corner to the top right-hand corner ever since the global financial crisis in 2009, and that should speak loudly for the recovery in US. With the lack of significant economic news, the rest of the week seems to be filled with discussion regarding central bank's role and the currency war. Even the president of the Independent European Central Bank, the Mario Draghi, commented during the post-meeting press conference saying that officials were concerned that the strong euro could hamper their efforts to pull Eurozone out of a recession. Although Mario Draghi carefully reassured that exchange rate is not a policy target, but he said that they could alter the assessments based on the effect of the euro on price stability, which raised speculation that ECB is preparing the market for its own version of competitive devaluation. In Japan, the finance minister Taro Aso tried to release some pressure from the members of the G20 prior to the meeting this week by commenting that the recent weaknesses in the Japanese yen have been more than intended. Then there is the post-meeting statement from the G7, which said that the group remained convinced that the market-determined exchange rates were the only accepted monetary policy and the government should satisfy domestic objectives using domestic instruments only. Japan's finance minister provided his own interpretation to that statement, saying that G7 approved Japan's use of stimulus to tackle the country's 15-year-long deflation, and that its currency is rightly market-determined. However, a separate G7 officials rebuked such claim and said that G7 statement was in fact referring to the excessive yen movements and concerns that Japan's officials are targeting a specific level. The currency war debate will probably escalate during the G20 meeting, which is scheduled in Moscow this weekend, the February 15 and 16. And judging by the dollar yen's reaction to the G7 statement, if the officials reiterated the same or harsher critiques, we could potentially see the dollar yen correcting from its recent top on Monday after the meeting. And that's all for this week in the markets. In the coming week, we'll get to see some housing numbers for January in US. December was a slow month for the housing market, so we would like to see a pickup in January. And also the Fed minutes to the January meeting will also be released on Wednesday. And in December, the minutes indicated that some officials were considering early withdrawals from the quantitative easing program. So we'd like to see whether that has changed since then or not. So until next week, on behalf of the Trading Pursuits team, we wish you all profitable trading.